The fair market value is a myth. It's not one of the most important things. It's not the thing to go after. Looking at cents on the dollar doesn't really make any sense. I hear this a lot. I'll buy any property at 60 cents on the dollar. Well, so would everybody. Of course they would. But that's such a stupid thing, an amateur thing to say when you're going into a negotiation. I'm going to show you, based on real numbers, why it doesn't make any sense to focus on that fair market value.
What is up, YouTube? Matt McKeever here, and in today's video, Adam Martin from my wholesaling team is going to be breaking down for you guys what he perceives as the fair market value myth. And so, first of all, fair market value is this concept in real estate investing that every investor is aware of, and yet every new investor really struggles to get a full understanding and a comprehensive understanding at that in regards to what fair market value is. So in today's video, I'm just going to share with you some tips and perspectives that may allow you to navigate those rocky waters of trying to determine fair market value.
All right, guys, Adam JD Martin back again on Matt McKeever's YouTube channel. I know, right? That's a couple in 1 month. I'm getting excited too. If you guys haven't met me yet, I'm a 26-year-old real estate investor right here in London, Ontario. And over the last 3 years, I've been working with Matt McKeever to build a 7-figure business in the wholesaling world. And in the process of doing that, I've had to actually analyze just about 1,000 deals, just over 1,000 deals in fact, and I've actually written over 1,000 offers on private real estate transactions. Now today, this video is about talking to you guys about a myth that I keep running into in our industry that I think more people need to be talking about. I think this is a big problem, and honestly, if the title brought you here, I know why. It's probably because you guys are also buying into this myth. Now, what's this myth? The myth is that fair market value is the most important thing to be basing your offers off of. I'm here to tell you that it doesn't make any sense. Okay? Now, the alternate title for this video, by the way, is why cents on the dollars makes no sense. It just doesn't make any sense, and I'm here to tell you why. It's because you don't have the same competitive and comparative advantages as anybody else in the market. So why do you care about what the building is worth today in its current condition to the rest of the market? Everything is relative. So what I suggest you should be more interested in is what your actual costs are going to be to bring you to the future value, the after repair value of the building that you're looking at. And so instead of seeking out this magical fair market value, which is what the building is supposedly worth today, what I want you to focus on is what will it be worth in the future based on recent and relevant comparable sales. No hearsay. No, my neighbor sold for this. No, I think I want this much for my property. No, none of that. It's all a myth. You absolutely do not play into those games with your sellers. What you need to focus on, and what absolutely needs to happen to break this myth, is focus 100% of your energy on understanding what is recent and relevant sales in your neighborhood on apples to apples comparisons. Look at buildings that look exactly like yours. What I'm talking about here is same amount of square footage, same number of beds and baths, okay, same type of building construction and age of the building. Make sure you have those things for apples and apples comparisons, and look for recent relevant sales of updated properties. That is going to tell you, based on your numbers and what you know to be the truth about renovation costs, how to get to that future value. If you know that your project is only going to cost you $50,000 in terms of renovations with your contracting team based on the square footage and materials required and the labor, you can then estimate what you would be willing to pay. Now that may be more or less than what anybody else in the market is willing to pay. And it will also depend on what strategy you're implementing. A BRRRR investor is willing to pay a different price than a flipper. And a flipper absolutely will be paying a different price or offering a different price than what a wholesaler would. So why are we so focused on cents on the dollar? It doesn't make any sense. It doesn't make any sense. Okay, I'm going to break this down for you right now, looking at a couple of different strategies using some real numbers so that I can impress upon you how bad this myth can be and how detrimental it can be to your business. So let's pull up some numbers and take a look. All right, let's look at a real set of numbers so that we can all get on the same page about how much of a farce it is that we need to be focusing 100% of our energy on finding the fair market value or getting some particular fixed cents on the dollars. I hear this a lot. I'll buy any property at 60 cents on the dollar. Well, so would everybody. Of course they would. But that's such a stupid thing, an amateur thing to say when you're going into a negotiation. Now, I'm going to show you, based on real numbers, why it doesn't make any sense to focus on that fair market value. So let's look at a flip. Okay, as we pull these numbers up, we can see there's a lot of numbers on the screen. So I'm going to break this down. What we're looking at here is an example where we could actually look at a flip that would have a fair market value of $350,000. Now, say we were able to actually get that property for $320,000. What have we just done? Well, we've just gotten a property below fair market value. Oh my God, it must be an incredible deal. It must be amazing. It's below fair market value, isn't it? Well, of course it is, but does that really matter? Now, a lot of you are cheating already and going to the bottom of the sheet where you can see that the net profit's a big negative, but let's walk through how we actually got there. If we look at this property and we make the assumption that we're going to flip it, it's going to take 6 months, and that we have a carrying cost of $2,339 a month based on a 3.94% B lender mortgage and land transfer tax at $3,000, as well as a renovation budget at $65,000, realtor costs at $21,000 using a 5% realtor commission, lender and management fee for $3,200, closing and land transfer tax at $4,200, a mortgage at 80% loan to value at 3.94%, costing you $1,339 a month. An average assumption, which I think is very fair, at $250 a month for utilities. Insurance for a flip because it's vacant, so we're going to have insurance specialized in that for $450 a month, and property tax at $300 a month, which should be reasonable for any of you guys in major Canadian cities. We're looking at some seriously major costs that add up over the lifetime of this project. Now, we can quibble about how long it's going to take a $65,000 project, but I'm going to also point out one big thing that I see investors making a mistake on, which is, oh, I could do a $65,000 project, which might look like doing your classic strategic renovations like bedrooms, bathrooms, flooring, paint, cabinets, kitchen, and lighting. That's all good. But what a lot of people forget to factor in is the actual time it takes to go from the time you got a firm offer on your property to the time it closes. We can't ignore the holding costs while it's sold, okay? But you're not getting paid until it closes, and you're also not going to stop paying debt or paying taxes or paying utilities during the time at which you're holding the building until it closes, okay? So that is why I believe a 6-month project seems reasonable if we're doing such an extensive renovation. Now, as we add all those numbers up, if you're still following me, we've got a $320,000 purchase price. And if we were just measuring our fair market value at $350,000, it looks like we got a deal. We actually saved $30,000. But as an investor, does that actually matter? Does it matter that we saved $30,000 on the purchase? Or is it more important that we were able to actually do what we needed to do to the building to get it up to what somebody would be willing to pay for its future value, the after repair value? Okay, so now you can see, and I hope these numbers make a lot of sense to you as a novice or beginner investor, or perhaps even an intermediate and advanced investor, that looking at cents on the dollar doesn't really make any sense. It's so much more important that we're looking at getting properties under contract where we understand the future value of that building, understanding fully what we would be able to capture for that building when we turn around and go to sell it, factoring in all of our renovation, holding, and closing costs. Does that not make sense? Can you not see that while this deal looks great from a fair market value, I just said fail market value as a Freudian slip. That's how much of a farce this thing is. It's literally impossible. So from a fair market value perspective, we got a great deal here. But from a net profit perspective, it's horrible. We're losing $7,000. And hopefully the only thing we're gaining for that $7,000 is the lesson learned to never measure fair market value as your primary factor. And that is why the fair market value is a farce. And if that wasn't convincing, why don't we go to another example? Let's look at another assumption. What if we were to hold this same building? What if we did the same thing but we didn't sell? Couldn't I make money then, Adam? Couldn't I then look at the fair market value and hope that by getting this property $30,000 under fair market value, I'd be able to still make a deal out of this? There's other ways to make money, you know. We're not all flippers. I get it. I totally understand. I fully empathize with your position, and that's why I wanted to show you the exact same deal using the exact same assumptions and putting into consideration a BRRRR strategy where you're going to go and refinance the property. So as you run through these numbers, follow me along here. Same purchase price, $320,000. Same fair market value at $350,000. Same renovations, because we still want to do the strategic renovations that add value to the property and get us that strong refinance. Okay, that's why we're still going to do the 65. Okay, but we're actually going to have less operating costs because our insurance is going to go back down to a rental. Okay, as we're creating the right circumstance and being transparent with our service providers, we're going to know that we're going to be having people into here. So you may be able to qualify for different insurance products as well as potentially get yourself into some different mortgage products. But to be able to qualify this property in this example in the same way, we're going to use the same assumptions as we did for the flip. Okay, so we're still looking at an initial mortgage of $1,339 a month at 3.94% using an 80% loan to value on the initial $320,000 purchase price. Our utilities are going to stay the same at $250 a month. Our insurance will now be $150 a month. Property tax is going to stay the same at $300 a month. So now we're going to look at some of the assumptions that you're going to need to have if it's going to be a rental. Let's look at the LTFMR, which is a ridiculous acronym that I just made up for long-term fair market rent. Okay, that's going to be our assumed rent that we can actually collect for this building once it's fully tenanted. And so we're going to look at a $2,500 inclusive rent. So maybe you're not in Toronto, but maybe you're actually in somewhere like London, Ontario, okay, where you could get $2,500 with all your utilities included. And we're still going to be looking at that 6-month project to do the strategic renovations. And then we're also going to be using a B lender because most of us that are scaling our businesses aren't necessarily employed with T4 income or working with banks that will allow us to get that A-level financing. So let's look at the B rates again and just compare apples to apples. Land transfer tax is going to be $3,000 again, and we're going to be looking at actually BRRRRing the property, which means going ahead and doing a buy, renovate, rent out at the high new rent, and then refinance and then repeat. So when we refinance this property, we're going to look at a refi at $420,000, our after repair value, and we're only going to be able to recapture $336,000, which puts us at a total of cash required for $148,634. Now, if all that sounded like a lot of numbers and a lot of math and a lot of assumptions to keep your head wrapped around, don't worry, I've got you covered. It's in the bold number at the bottom, the cash flow, okay? Not only are you going to have $68,000 stuck inside this deal, equity that you can't leverage, you can't use on the next deal, it's basically useless unless you register another second mortgage on this property at a really high interest rate. You're going to be stuck making $43 a month. That was an intentional pause for silence. That's a moment of silence for your wallet, your bank account. They've just died. You've lost all your money. You've got $68,000 stuck in a deal that's basically useless to you, and you're getting paid $43 a month. Do you know what I just paid for a dishwasher? $1,000 after install. Do you know how long it's going to take to get your $1,000 dishwasher replaced in your unit? Well, it's going to take you a couple of years. And don't forget there's other repairs and maintenance that are likely to come up over the lifetime of this investment. $43 is a completely unacceptable amount of cash flow to be collecting to take on the risk of having tenants, take on the risk of having damage, repairs and maintenance, and regular things that you need to do to keep the asset up and even at its current value. So, this is all to say that the fair market value is a myth. It's not one of the most important things. It's not the thing to go after. It's not the thing to base your offers on when you're just going out there and blindly throwing offers at every deal you see on Kijiji or Facebook Marketplace or that the realtors have listed. Do not make this mistake. I see it all the time. And having written 1,000 offers myself, I can tell you that I am never focused on what the current fair market value is. I am always more interested in what's the condition of the building, not the price. What's the condition of the building today? And what is it going to take to elevate and lift the condition of that building using strategic renovations like kitchen updates, bathroom updates, flooring, paint, lighting? What's it going to take to do those renovations to get it up to a point where it matches the quality of the recent and relevant sales in that same market for apples to apples products that are renovated? The future value is what matters. That's what you can actually take to the bank and get money for, or take to the market and have the open market come and bid on. That's what matters. So please do not fall into the trap. Fair market value is a myth. Cents on the dollar makes no sense. And if you guys want to see more content and more lessons learned from me, again, my name is Adam J.D. Martin. You can find a link to all of my social media and more content from me in the description. And I look forward to seeing you guys back here on Matt McKeever's channel.
Thanks again to Adam for taking the time to shoot this video. And quick reminder, guys, this isn't the first time Adam's been on my YouTube channel. In fact, we've got a lot of videos with Adam. So we'll throw a playlist in the video description down below if you guys want to check it out. But a reminder, Adam's actually started his own YouTube channel as well. And these days, he's in a race to 1,000 subscribers. You guys maybe remember when I raced Matt Pichet to 500 subscribers about 5 years ago. So really love to support Adam. Love to see you guys support Adam. So there's a link in the video description down below to his YouTube channel. If you got value, jump over, give him a sub, as well as smash that like button. I'll see you in the next video.